If you're a sole proprietor, then this is how you should be paying yourself. Hello, everyone. My name is Mike Braun, and for those who do not know me, I run an accounting firm here in Susquehanna, Pennsylvania, where I help local business owners by managing their monthly bookkeeping through QuickBooks Online, while also providing tax preparation services for those business owners as well. So basically, we're your all-in-one accounting hub. So without further ado, let's get right into today's episode where we'll be going over how you should be paying yourself as a junk removal business owner. So obviously this is going to mainly go over this for sole proprietors and single member LLCs. So that's again just clarifying that if you're a partnership or an S corporation owner, this doesn't apply to you. So as you can see, it's a step-by-step guide. So I just want to go over the first couple steps here so you'll see. The very first thing that I'm going to be going over is separating your business finances, what owner's draws really is, what that means, and how that's really how you're going to be paying yourself, how you're going to be able to track that money, what you should be doing for that, and then the actual estimated tax part as well. So again, this is just my disclaimer here. This is just clarifying again, this is for single member LLC business owners and sole proprietors, not for partnerships and or S corporations. So again, just wanted to clarify on that part. So the very first thing that we're going to be going over, and obviously since that's what I wanted to mention, is sole proprietor single member LLCs. So this is what you'll be filing with your business return. So this is what you're normally used to seeing is a Schedule C. So this goes on your personal return when you go to file your taxes at the end of each year. So step one, as I mentioned before, separating your business finances. What does this really mean for you? Well, obviously the very first thing that we're going to want to go over is having a separate business bank account. You can't be having your personal bank account mixed in with your business bank account. You can't be mixing in your business transactions with your personal transactions because it's too discombobulated. It makes your tax life a lot harder on you trying to figure out what's business and what's personal. Just have a separate business bank account, and then obviously keep your business funds separate. Obviously put some money into that business when you first start off and keep it there. Keep all of your income, so tie all of your income accounts that you have directly to that checking account that you open, and tie all of your expenses to that debit card that you're using, or if you want to open up your own business credit card, then you can do that. Just have it all go through this business bank account. That's really all I'm trying to say here. That's really how you're going to be able to separate your business finances from your personal finances, which is what's going to basically start off in how we're going to be ended up paying ourselves, because you can't pay yourself if you have your own personal checking account and that's how you're doing your business out of, because obviously the money's already there. And again, don't do that. So obviously this is going to make your tax life a lot easier by opening up your own business bank account. You can open one at your local bank most of the times. I mean, those are completely free. I opened one at a credit union. The local credit union, it was completely free for me to do that. So I recommend just avoiding one with any sort of annual fees. So how paying yourself as a sole proprietor, single member LLC is different than any sort of S corporation or any sort of partnership and things like that. You're basically taking what's called a distribution, which means that there is no taxes withheld on it. There is no payroll. You're not paying yourself a wage or anything like that. You're basically just simply transferring money from your account to your personal account. It's literally that simple. I can't make it much more complicated than that. So you don't get a W-2 at the end of the year with all of your wages that you might have earned. You, as I say here, you take owner's draw instead. So basically, if you're an accountant, if you're already familiar with this stuff, it shows up on your balance sheet at the end of the year. Or if you're just a business owner, this is basically all that's going to happen is whatever your profit is at the end of the year is what you're going to be taxed on. The owner's draw isn't any sort of thing that you're actually taxed on. What you're taxed on is the profit that your business makes. And since this is this is a Schedule C, which goes on your personal return, it's already attached to your personal return. So they can't tax you on any sort of draws or distributions that you're making. So as it says here, owner's draws are not business expenses, so they're not deductible. You can't basically put them on your Schedule C when you go to file. It goes on your balance sheet, and all it really is to keep track of what money that you actually paid out to yourself, to your personal checking account. As it says here too, doesn't reduce the taxable profit that you had. So again, doesn't have any impact on the profit or the money that you're making that's going to be taxed at the end of the year. All it is literally just a simple movement of money from your business bank account to your personal checking account. That's really all it is. And you can be, as it says here, flexible, but be smart. Obviously, if you're in the junk removal space, you obviously know that you're going to have months where you have high months and you have low months. You're going to have periods where you're doing great one month and you're not doing so good another month. All I'm saying here is you want to be careful on how much money you're taking out for your own personal use, and just kind of have a plan, just kind of have a budget on how much you should be withdrawing, because you obviously need enough money in that business bank account to pay off all your bills and all your expenses that you have on a monthly basis. So just remember that, of course, when you're taking money out of your business. That's really all I have to say about that piece there. The next part is making sure you track the money that you're taking out. So if you're using QuickBooks Online, it's pretty simple. All you're going to do is categorize this as an owner's draw. If you're doing your own bookkeeping through Excel or Google Sheets, then you're just going to basically say this is an owner's draw. It's not an expense. It's not really anything. By doing that, you're basically telling your tax accountant or yourself at the end of the year that this isn't a business expense. This was just me taking out basically my earnings for what I needed to live on. So that's basically what that is. You don't need to put like this was for rent, like the owner's draw was for rent. You don't have to do that. You don't have to be specific about it. All it needs to be is simply stating that this was an owner's draw. That's it. It's needed for good record keeping, because you obviously want to have a balance sheet that has a good idea of how much money you've actually taken out of the business. And then obviously you don't need to track what the draws are for, so that just goes back to the whole rent thing. The very last thing that I kind of want to go over, and this is the final step, is estimated taxes. Now, as a junk removal business owner and as a sole proprietor, as a single member LLC, we're required, I put required in quotation marks, to pay quarterly estimated taxes based on how much tax liability we have based on the prior year. That kind of varies, obviously, person to person, taxpayer to taxpayer. So what I do is I feel like it should vary based on your current year income. So what I generally tell people to do is set aside 25 to 35% for taxes. The way, obviously, as a self-employed individual, you have to set aside 15.3%. That's the self-employment tax that we pay as our own business owners, because we get taxed on our employee FICA taxes, and then we also get taxed on our employer FICA taxes. That's the benefit of being your own business owner. And then, so that's what this says right here, pay SE tax, self-employment tax. And then you obviously get the other luxurious piece where you have to pay federal income tax as well. So add another 10 to 20% on top of that, and that's where that comes in. So that's why we say set aside 25 to 35% for taxes. Again, this kind of varies per taxpayer, so I recommend consulting your own tax accountant, or eventually using this link right here that I'm going to actually show you guys. The main reason that we have clients pay quarterly taxes is to avoid any year-end penalties. There's sometimes clients get what's called basically underpayment penalties, and that's basically when you don't pay enough in throughout the year. Anybody who doesn't pay quarterlies actually ends up having to basically pay the underpayment penalty, especially if you're self-employed. If you're a employee, they don't have that. They don't have to deal with that. But that's, again, goes back to the luxurious part of being your own business owner. So quarterly taxes are due in April, June, September, and January of each year. And this obviously can apply to state as well. So if you're in a state where state income tax is high as well, you might have to pay state quarterlies as well. But this calculator here will actually, I think this is probably one of the best calculators that I've been able to find and not having to create my own. This is, I don't even know, taxoutreach.org. I didn't even know the name of the website, but I don't recommend using, this is like the base one, so this is just like a very basic version. I recommend skipping to like the advanced one. And this is basically going to ask you some personal questions, like based on like your filing status. So if you're single, if you're married, if you are the head of household. So in this case, I'm just going to say I'm single. What year I was born. I'll put the actual year I was born, which is 2001. I have no children. And basically, it's just going to ask you how my household income is income from the following sources. I'm just going to say self-employment. And then you'll basically put in how much self-employment income you've had. You can put, this is how much I make on a monthly basis if you want to do the average. This is how much I make on an annual basis. And let's just say this year I'm going to do around $50,000 in self-employment income. And then I can put more. Basically, this is household's total business expenses. So this is just trying to get an idea of like the actual business expenses that you might have. What I recommend doing is just when you enter your total self-employment income, just enter in your total self-employment profit, not the actual income. So like the actual net profit that you have. Just enter that here rather than having to enter in all these different expenses. So I'm just going to leave that blank. It might ask you for other expenses and things like that. I'm just going to say no. How many payments do you want to make? 4 payments, obviously, because there's 4 quarters. And then right here, it's going to give you a whole breakdown of what you need to basically pay in and how much taxes you owe, total liability. Now, obviously, this isn't the end-all, be-all calculator or any sort of thing like that. But I think it definitely helps out, gives you a good idea of how much you might want to be paying each quarter based on how much you think you're going to earn or how much you're currently earning. And it kind of gives you a good breakdown of everything. So obviously this was for 2025. These numbers haven't been updated after the big, beautiful bill came out on July 4th. But once it does, I'm sure it'll be a little bit more accurate because right now, I know for 2025, this is going to be $15,000, I believe it's $15,750 for single. So this is obviously going to be changing as well. But in the meantime, this is probably the best calculator I've been able to find when it comes to basically trying to calculate your quarterly estimated taxes. So yeah, if you have any questions regarding having to pay yourself as a junk removal business owner or as a business owner in general, I'll be happy to answer them in the comments down below. In the meantime, though, be sure to subscribe to my channel. And other than that, have a great day, everyone, and I'll see you in the next episode. Peace out.